And then I'd like to welcome Gary Brode. And Gary has spent over 30 years in the securities industry. Most recently, he was a managing partner and senior portfolio manager for Silver Arrow Investment Management, which is a concentrated long-only hedge fund with options-based hedging, where the long return on invested capital beat the S&P 500 by nearly 100% over 8 years. The high generating intensive research process that produced outstanding returns at Silver Arrow is the foundation of deep knowledge investing, which is the current company that Gary has founded. So deep knowledge investment helps hedge fund managers, portfolio managers, family offices, and high net worth individuals to earn higher returns in the equity portion of their portfolios. The company provides subscribers with high alpha, well-researched stock ideas and timely market commentary. So, Gary, that's really interesting. That's the formalities, but I'd like to hear something about you from your own mouth. First of all, can you tell us you're known as a very good stock picker as well? Can you tell us how did you get so good at picking stocks?
Oh, thanks, Christian. I appreciate it. Before I answer that, I just want to say it's great to be speaking to a Danish audience. I'd let you know earlier that when I was young, I spent a couple summers traveling through Germany and Denmark and stayed with Danish families, host families, and loved Denmark, loved the people, had wonderful experiences. The people there were very kind to me. And even though I was 13, 14 at the time, it ignited in me just a love of travel and seeing different places. And I owe all of that to the Danish people. And so to the extent that I can be at all helpful to any of you today and help you maybe understand the markets better or come up with a good stock idea, it's my way of saying manga tak.
Very good. So you did actually spend some summers in Denmark?
Yeah, 2 of them, and just had wonderful experiences. I'm actually in Tamarindo, Costa Rica right now. Okay. Just because I had wonderful experiences traveling when I was young, and so it's the kind of thing you do throughout your life.
Is it like are you traveling around and like while you're doing your research, or how does it work for you?
Yeah, everything's gone virtual. I can work from anywhere and do. My team, nobody has to be in the office. All of the analysts and interns are told on day one, you can work from anywhere. You can keep whatever hours you want. You can live whatever kind of life you want. Just get your work done. And if I need to be physically overseeing somebody and watching them work to make sure they're doing their job, then this isn't the right place for them. We're really only interested in working with people who are excited about stocks, driven to make money, and who really want to help our subscribers do well.
And can you tell me a little bit about the team? Like, what kind of people do you have as a part of the team?
So the analysts and interns are in college, about to graduate. We've got a couple from Hofstra, someone from Rutgers. Really remarkable young people. They are absolutely incredible, hardworking, smart, driven, take correction well. They're just really terrific young people. We also have a very large, incredibly accomplished board of advisors. We have 2 people who have worked in the White House for 3 different presidents. I have somebody who is an attorney who has practiced in front of the United States Supreme Court. We have energy experts, alternative energy experts, family office people, portfolio managers. One of our international relations people in her spare time helps the FBI with hostage negotiation and rescue. Just really an amazing group of people. For any of you who are curious, feel free to go to www.deepknowledgeinvesting.com, and there's a whole section there for the board of advisors and the team, and you can read everyone's background, but they are an amazing group of people.
So and how does it work? Do you actually manage funds, or are you just giving advice and having subscribers?
So it's interesting that you asked me that question right now. When I started the business 2 years ago, the intention was to work with people on a subscription basis. And what we provide people are 3 to 6 fully researched, high probability ideas a year, and then timely market commentary. And on that, we actually told people to short the market in February of 2020, right ahead of the COVID lockdowns. We've been very effective. And then we've had people come to us and ask for more. We're in the process of taking on our first managed account right now. We're arranging to run a thematic portfolio for a new startup where we'll be running basically a theme-based product. People who are interested, feel free to reach out. As soon as the documents are done, they're more than welcome to invest with us. So we're actually starting to manage money directly for people, even though it wasn't part of the business plan originally.
Okay, I see. Okay, so maybe we should we can perhaps get a little bit back to how you work later, but perhaps you can tell us a little bit about how you see the current markets. It's quite volatile the last days. I think it's really I mean, you get a little nervous in these kind of markets if you're not like experienced like you are. I think I see a lot of people getting nervous. What do you think about the current situation?
Yeah, it's something. I think you make a great point, and it's worth conveying to your audience. Frequently, the difference between a professional investor and an amateur is emotional control. And it's not that people who are professional investors don't have emotions. There are times that, we all get nervous and have that horrible feeling in the pit of our stomach. Losing money isn't fun, and facing circumstances is difficult. I think the key thing that you learn, or at least that I've learned in 30 years of doing this, is just because you have feelings doesn't mean you need to act on them. So just because we're nervous about something doesn't mean we need to make an ill-advised trade. Just like every time you're angry, you don't need to hit somebody. You can have a feeling and choose not to act on it.
Yeah.
I think the current situation is interesting because we see a few things going on. One is we've reached the point where the Federal Reserve in the United States can no longer ignore inflation. And last week, the Biden administration renominated Chairman Powell. It was the best move that they could make. And this week he removed the term transitory, which we always found funny. We've actually put in writing that every time the Fed talks about transitory inflation, that there's no way they can know that. I mean, think about how ridiculous it is for them to say, okay, we have inflation now, we'll have inflation in three months, we'll have inflation in 6 months, and then it'll go away. They have no way of knowing that. They're just making stuff up. So we're talking in the United States now. They're winding down they're tapering the quantitative easing, which just means printing fewer dollars. And yes, that's not an exact term, but it's an easy way to think about it. Interest rates are, oh, sorry, losing my camera there. Okay. Interest rates are set to go up. And so that's something that does affect a lot of the high growth technology stocks that, you and I have talked about and we'd like to invest in. And then, of course, last week there was fear about this Omicron variant. And I don't know that people are so worried about the variant itself as they are worried about what the response might be. Are we going to have more lockdowns, more business shutdowns? Or is the United States and other governments, are we going to follow the model of Sweden, where they've pretty much stayed open? Right now, the U.S. is very much open. And so, will that remain the case? And I think that's the fear that people have, and something that they're focused on right now, rightly so.
So how do you think you should act as an investor in this environment? Like, should you be like 100% long, or should you like have a portion of cash, or would you hedge your positions, or how do you see this?
Yeah, Christian, that's exactly the right question. I mean, you're right at the key point there. So we don't like holding cash right now, simply because we think there's going to be inflation, and it's hugely understated. The real estate energy portions are definitely understated, although energy is coming back down. We'll see what happens long term. But I think those numbers are understated. And when you have inflation, a simple way of describing it is that the purchasing power of your currency is going to decrease over time. What we like doing right now is we're fully invested in companies where we think the fundamental performance will be exceptional, and we want to own those companies. And then we're also heavily hedged. And we've written on this. We put out a piece a couple weeks ago talking about the way we're hedging using gold, silver, Bitcoin, oil, and these are not necessarily areas where we're trading in and out of things. Commodities are not our greatest area of expertise, although we do have that expertise on our board of advisors. It's really more a matter of trying to hedge against a very unusual environment right now.
So if you have like your total portfolio, I mean, if you were to, I don't know if you have a portfolio yourself, but how large a portion of equities do you think you should have? Should it be like 80% and then 20% of those kind of hedges, or what do you think?
Right now, we're about 80% long equities, primarily U.S. equities. That's not a comment on Europe or Asia, but it's a market that we know very well, and I'm always looking for a research edge. It's not that we won't invest in other places, and in fact, one of the companies we're looking at right now as a potential investment is based in Europe. So we're willing to do that, but we try to stick to what we know well. We have another 20-30% in what we'd consider hedged positions, and then we recently took on another 20%, just a short against the market that has paid off pretty well. We wouldn't consider that last one a long-term holding. It's just hedging at a point where there's a lot of uncertainty.
Okay, so and when you buy the commodities, is this ETFs or futures, or how do you actually do that?
Yeah, so with gold and silver, and we've written about this, they're tricky because those aren't operating companies. Now, people can own the miners, and that is where the most leverage is. The reason we don't own the miners is because here's how that business works. The management team, they drill cores, and there's a certain amount of stuff underground, and they tell you how much that is. And I have no way of confirming that or not. We've chosen to own metals through the ETFs, GLD and SLV. In the case of a real emergency, like if things really did fall apart, you would want to own the actual physical metal, but doing that, it creates other problems. How much of that do you want to store at home? It makes you subject to theft. For anyone who's listening, I don't own that in my personal home, so if you come, you'll be disappointed. It won't work out the way you're hoping.
No.
But there are security issues, and there are people who may hold gold in safe deposit boxes and think that's safe, and in some circumstances it might be. But we would remind people that back, God, I think it was the 1930s in the United States when owning gold was illegal. They raided safety deposit boxes. If either you're holding it or someone else is holding it, those are your options.
Okay, and then you mentioned shortly Bitcoin as well. That's pretty interesting, I think, because not everyone likes that, of course. But you see this as a natural part of a portfolio to have a little bit of Bitcoin.
Yeah, so we stayed out of Bitcoin for years simply because there's the reason people question it is, what's it worth? How do you establish a value? Right? Is it worth anything? And I know there are a certain number of people listening to this discussion right now who are wondering that and thinking it can't be worth anything. And the answer is, we'll see. We publicly bought Bitcoin a little over a year ago at 15,000. It's almost 4 times that amount right now. So it's grown substantially as a percentage of our portfolio.
Yeah.
Our thesis on this is really two-part. One is, and this isn't just the United States, the Federal Reserve, large governments all over the world are printing enormous amounts of currency. It's ridiculous. And so, to the people who are Bitcoin skeptics who are saying, how do I know it's worth anything? I would say that's a completely valid concern. And how do you know the same about your national currency, right? Why do you have any confidence in the US dollar or the Danish kroner or the euro or the Japanese yen or, the Costa Rican colones? Ultimately, they're run by people who can inflate the amount of currency available, decreasing the amount of purchasing power you have. The second part of the thesis for us is institutional acceptance. So let's think for a minute about what it's like to run a big asset manager. And what these people tend to do is they look to everybody else to figure out what to do. And, I always laugh because our goal at Deep Knowledge Investing is to have a different opinion than everyone else. We're looking for places where we disagree with the market, where we think conventional wisdom is wrong. These are people who get together and they have best practices meetings. And that sounds great, right? Chris, not against best practices, are you? You couldn't be, right?
No.
Okay, well, let me tell you what happens at a best practices meeting. People get together and they all decide that they're all going to do the same thing so that if it doesn't work out, they can say, well, this is what we were all doing. We followed best practices, right? It's a huge cover your rear end exercise. So let's think about doing something new as a giant brick wall, right? And most of these institutions don't want to scale that brick wall. Okay, fair enough. That's their right. And our view is that every time a large institution, a pension fund, a BlackRock, a famous hedge fund manager, somebody decides to buy Bitcoin and they do so publicly, they go and they take a brick off the top of the wall and they put it on the ground and they lower the barrier for the next most agile person. And so Bitcoin mining right now is about 900 coins a day. It'll continue at that rate for the next couple of years. And that is your growth in supply. But every time you have growth in demand, you've got people coming in buying $1 billion of Bitcoin at a time. What's mining right now? Something like $50 million a day. So one person can come in a day and buy 20 days supply. So what we see is just a gigantic supply and demand imbalance. Will Bitcoin work long term? We don't know, but short term, if you have $1 trillion pension funds taking 1% positions, I want to own it before they buy it.
True. So how big a part do you think crypto or perhaps only Bitcoin should be in your portfolio?
I think that the guys at Horizon Kinetics made a phenomenal point on this. So Chris Bell, he's the national manager for Horizon Kinetics, and he is a member of the Deep Knowledge Investing Board of Advisors. And for anyone who's interested, again, you can go to the website, deepknowledgeinvesting.com. And if you go to the blog, there's a conversation from a year ago with me and Chris Bell and Peter Doyle of Horizon talking about Bitcoin. And they made a phenomenal point. And they said, it really only needs to be 1% of your portfolio. And I asked them about that. I said, wait a minute, guys, in the equity world, when we have something that we think is our best position, we want to be huge in it. We want to own 10%, 15%, 20% so that we get outsized returns. What you're saying is this is the best idea you have, and we should have a 1% position. And their response was the potential returns are so high that if it doesn't work, you lose 1%. If it does work, you're going to make an absolute fortune. And I thought that was really interesting. Now, between you, me, and your audience, my personal position in Bitcoin is larger than that, partly because I bought more than a 1% position and partly because it's tripled, quadrupled since we originally bought it, and that will make it bigger. So we're bigger than that. But for those of you who want to be involved in Bitcoin but still have concerns and fears, and they're legitimate concerns, they're legitimate fears. These are not wrong. People aren't wrong to be worried. What I'd say is take a 1% position and accept the fact that, you know, you might lose 1% on it, but if it works, you'll be there.
And are you doing anything else in crypto, like Ether or Binance Coin, anything more speculative?
Yeah, so I'm not, but it's worth talking about. And in fact, last summer we did a webinar again with Chris Bell and with Michael Busella, who's one of the founding partners of Block Tower. And Block Tower is a phenomenal crypto fund. Anyone who's interested in talking with those guys, let me know. I'll put you in touch. And the whole discussion was on non-Bitcoin crypto. And I think that people are correctly making the point that Ether has a better network. The use applications for Ether are better. There are reasons to believe that Ether has the better mousetrap. That said, if we look at the history of technology, frequently the reward doesn't go to the person who has the best solution. The reward goes to the person who gets to scale first. And right now that's Bitcoin. And so, you know, we've seen that again and again and again, where there were people who had superior solutions, but someone else got to scale first, and there's just a network effect to these things.
Okay, interesting. Now, Gary, I know you have some stock pick for us, but before we go to that, I would just like to ask you about your results and how you became to be such a good stock picker, because you overperformed the S&P with nearly 100% in 8 years, which is pretty amazing, I think. And I would just like to know a little bit about your way of working and the team's way of working before we go to the actual stocks.
Yeah, thanks, Christian. I appreciate the question. So with deep knowledge investing, more than 80% of our picks over the last 2 years have made money. The couple that haven't, we still own, and because we like the fundamentals. The fundamental performance has been what we expected. The stock price hasn't, and you know, we're patient. But either way, you know, making money more than 80% of the time is pretty good. We'll be happy to stand on that. You know, regarding performance at Silver Arrow, that's certainly worth talking about, but I would be remiss if I didn't mention that, you know, I had a partner and co-portfolio manager, Raji Kabaz, who, in addition to being one of the best people I know, is a phenomenal analyst, stock picker, portfolio manager. I did not do that by myself. The two of us did that together. And, you know, Raji is a huge part of that performance. And, you know, we did that together. And he really is just a first-rate person and a first-rate stock picker. Incredible performance by him. You know, our approach at Silver Arrow, which I've brought over to deep knowledge investing, is there are two ways to outperform. One is concentration, the other is leverage. And we chose concentration. And our feeling is it's very hard in this business to get an information edge. The information is widely distributed, but it's possible by following companies for a very long time to get a knowledge edge. We tend to be creative thinkers. We will find innovative ways to solve problems. I think we're very good at identifying examples of groupthink, and we've seen all kinds of situations where everybody is convinced that something's true because they're all talking to each other. But if you look at the situation on the ground, the actual results, nobody's looking at that. And, you know, I can give you if you want, I can give you a couple of examples of where we've done that. You know, one is back in 2012, we wrote a piece called TV is Next. And every big hedge fund manager on the street owned Viacom, CBS. A lot of them owned Disney, which owns ESPN and ABC, and they loved the business. And I spoke to some of those people, and I said, "Hey, any concerns about Netflix, YouTube, commercial avoidance, piracy, Hulu, streaming television?" The answer is we haven't thought about it, and we realized, oh my God, these guys, they're talking to each other. and this business is about to be upended. And so we wrote TV is Next, saying this is a ticking time bomb. And we were right. 2 years later, the whole business imploded. And huge amounts of value was destroyed because that whole business fractured. Another great example was from a year ago. So in the summer of 2020, everybody thought the hospitals were going out of business. This is in the United States. And remember, they shut the hospitals down. It was pretty much all COVID all the time. All elective procedures got canceled. For those of you in a European audience who are used to a different healthcare system, in the United States, hospitals tend to make a lot of money on elective procedures. So things like a knee replacement or a hip replacement, you need it, but you don't need it right now. It's not cancer treatment. And so our hospitals were shut down and everybody was worried they were going to go out of business. And we bought a huge position in HCA, which in my opinion is the best operator. And we did it basically thinking two things. One, there's no universe where the United States was going to take all of its top medical treatment facilities and only treat COVID. Now, with all sincere respect to those of you who have had your lives disrupted by that, who have lost friends, who have lost family, who have gotten sick, we're not insensitive. We understand that it has been difficult for a lot of people and that people have died. That said, COVID is not the only medical problem that people face. And there are people who need stents for heart problems. There are people who need, knee replacements. There are people who need cancer treatments. You can't take all of your medical treatment facility and just treat COVID. And what we realized was all of these procedures that weren't being done was delayed demand. And so, yeah, they were going to have a quarter where maybe the earnings weren't as high as people thought, but all of those procedures just got pushed out. And just people were looking at it wrong. They were looking at the current situation and extrapolating that forward. We looked at the current situation and said, this can't continue and it won't continue. And guess what? It didn't. Everything's now open. So these are situations where there's been a consensus around certain ideas and we've just found ways to do things differently.
Okay, I see. So let's talk a little bit about one of your latest pieces, which is something you wrote about the EdTech sector, which is the educational tech sector, which is actually the two stock picks that you have for us here today. The first one is Coursera. Could you tell us a bit about that stock?
Sure, I'd love to. But Christian, do you mind if we just take a step back?
Yeah, okay, yeah, fine.
Let's talk about the big picture for a minute, right? So what we have right now is a worldwide disruption in employment, right? We've got, I mean, the United States at one point due to COVID, we had 40 million people out of work. Now the situation has gotten a whole lot better. But take a look at all of the jobs that are going to disappear. So over the last couple of decades, we've seen secretaries and assistants replaced with electronic devices. We no longer need a secretary to take messages for us or keep a calendar for us. These things are all being done electronically. We'll look at the next round of these things. Amazon has robots doing a lot of the work in the warehouse. A lot of that's automated. If you go to a restaurant now, at a lot of places, you can place an order using your phone or a kiosk, right? Well, you don't need as many servers or cashiers or people to take your order. Supermarkets are going to self-checkout. I think self-driving cars will come later than other people think, but at some point, being a driver is not going to be a great business. And long-haul trucking, at a minimum, we're going to see automated trucks on the highway at some point. Now, right now, we need a lot of truckers, and in the United States, we're short truckers. We need more of them, but I don't know. Is that a job that we'll need as many people 10 years from now? I'm guessing no. So there's this whole disruption. And what we've had over the last 2 years is an experiment in online education, right? And what we've discovered not only in the United States, but all over the world, that online education works, that we can be talking face to face. You know, the first question that I asked Eric when he said, hey, can you speak at a Danish investment conference was, do you need me in Denmark? Right? We're doing this live. We're right now, this is an educational seminar, and I'm in Costa Rica and you're in Denmark, and here we are. We can do this. And so what we've seen is that it worked. And now let's think about two groups of people. Let's think about people in the United States where the traditional path isn't right for them. Maybe they have a young child at home, they're caring for aging parents. Maybe they don't have the money or the desire to spend 4 years on a college campus, right? They've delayed. You know, for a lot of us, we got out of high school and spent 4 years at a college campus, and that was wonderful for us, but that's not the right path for everybody, and not everyone can do that. Not everyone can afford that. Online education makes education and a better career accessible for millions of non-traditional learners who weren't fortunate enough to be able to do the kinds of things that, you know, that my parents allowed me to do. And I think that's fantastic. And now let's look at the rest of the world. So think about the millions of people in places like Brazil or India, where there is a very, very high demand for education, for a good job, for a better life. But these people, they don't have the money or the wherewithal to travel to Europe or travel to the United States, get a visa, you know, and spend 4 years in a foreign country. That's very expensive, and the education is expensive. Well, what if you could do it for a couple $1,000s in 2.5 years online and race through and get in the workforce? That's life-changing. And we have hundreds of millions of people who are going to be of age to enter the workforce in the next 10 years. This is a huge, growing worldwide market, and we're in a position to provide education, skills, and better jobs to people all over the world at a fraction of the cost of what it was, and without them having to travel and leave home and dedicate 4 years of their life to living overseas. And that's world changing.
I think one reason why in Scandinavia we have been maybe a little bit slow to understand this or adopt this is that most education is free in Scandinavia. It's like you know, even the best universities, if you qualify, of course, but in the rest of the world it's not like that. So online education makes a lot of sense because it's just very expensive to go to the university in the US, right?
It is in a lot of places, and I would point out that it's not free in Scandinavia. It's just not paid for by the student at the point of sale, right? So somebody's paying for it.
Yeah, that's true.
Right, and I'm not arguing that one system's better than another. I'm just pointing out that nobody's doing anything for free, right? You still have universities with buildings that have to be built and paid for, and professors, and you know, somebody's getting paid somewhere.
Yeah.
And yeah, it's entirely possible that Scandinavia will not be fast to adopt this model, and that's okay. You know, for 4 years I spent at the University of Michigan were fantastic. I wouldn't wish that away, and wish that I'd spent that time at home online. But now let me give you a hypothetical scenario where someone in Scandinavia might love the idea. Right? So Christian, you're right. The student can go and not be charged. But what if a student says, I don't want to spend 4 years on campus. I want to spend 4 years traveling the world and also get my education. So just like I'm here in Tamarindo, Costa Rica, and I'm working the whole time because I have internet access, I can work from anywhere. Maybe some 17, 18-year-olds in Denmark will say, I want to travel all over, and they'll use Zoom and online education, and they'll still get their degree, but they may not do it from campus, and they may have completely different experiences traveling, being in different places, and maybe they still won't pay the university. Maybe they'll still get a free education, as you phrased it, but maybe they won't be on campus for that.
Yeah. So I think the other thing that you would hesitate with is like, is it as good as the as actually being on campus and meeting up with your professor and so on? I mean, I know you have heard that argument before, but I would like to ask you the question anyway to say,
Yeah.
is it as good as actually going to the university and meeting your fellow students and meeting the professor and so on?
Right. Yeah. And that's a great question. And one of the things that we would point out, and I will answer that question, but one of the things I'd point out is we applaud the universities for offering students a choice. We're not saying shut down the universities, don't let people congregate on campus and meet their professors in person. We're saying give them a choice, right? For some people, they'll want to be on campus. Others might prefer to travel or be other places or just have circumstances where they can't be on campus. We're about offering people choices. And for some people, one option will be better. For others, another will be better. But let's address the issue that you brought up, because it is something that concerns people. And I have two examples that I can relay. One is, so the program in the United States that was a real early adopter of online education was the MBA program at the University of Illinois. And they've grown that. I think they went from 250 people to 2,500, and I think they're heading for 25,000. It's been a remarkable program, and they were worried about exactly what you said. Are these people not going to connect? And when they had their first in-person reunion, the person who had set all of it up, set up the program, realized that these people knew each other, that they'd communicated just like you and I are, and they knew who had gotten married and who had had babies and who might have lost a parent to disease, or who was doing well, who needed support. They formed very real relationships, and they did know each other, and they did care about each other. The other example I would give you is there's a member of the board of advisors for Deep Knowledge Investing who is remarkably well qualified. He has an incredible background. And because of online education, he's a professor at 3 different universities. So now think about the possibility. You're thinking about, wait a minute, can we meet with that professor face to face? Okay, so it's a great question. But another way to look at it is, hold on, these great professors can be available all over the world. They can teach in 3 different states at 3 different universities. They can teach all over the world, and we're making that accessible. And what he told me is he thought that early in 2020 that he wouldn't connect as well with students online as he had in the classroom. And what he told me is that the connection was better, that the class knew each other better. And the reason for that is, think about this. Think about the two of us talking right now, face to face, each in our own intimate space. There's no back of the room, right? When you're teaching online and everybody's face is up on camera, right? No one can hide in the back of the room. People are there, they're engaged. And they connect in a very real way. And he actually said that his connection with his students post-COVID and online was better than in person. I think these are situations that it's what you make of it.
And so how does it look like when you look at the numbers? I guess this industry is growing quite rapidly, I guess.
Yeah. So first of all, 2020 and early 2021, Coursera had insane growth rates, 60-70%, because of course they did, right? You had this huge demand for online education. Everybody had to stay home. And the fear was, okay, well, this can't continue. Well, of course it can't continue. Nothing's going to grow 70% a year, right? That's not realistic. But Coursera has said, we think we can grow 30% a year, and I absolutely believe that. And what if they do that for the next 10 years, right? Right now, I think the Coursera has something like 16,000 students earning online degrees. They have 93 million registered learners who are part of the consumer segment. But more importantly, the corporate partnerships have grown over the last 5 quarters from something like 300 to more than 700. And so these are companies where people, in order to be promoted or keep their job or get a job, they complete online certifications. And this is a very inexpensive way for employers to keep their employees engaged and current and with a current skill set. It's a way for people to advance in their careers or continue to excel in their jobs. So when we see that and we see that kind of growth, and they say, you know, we could grow 30% a year for the next 10 years, that to us is believable. I think the more interesting part is Coursera's last quarter more than anniversaried the COVID lockdowns, and they still grew the consumer segment. And so the fear that people had was, okay, everybody was locked down at home. They'd watched everything they could possibly watch on Netflix. There was nothing more on TV, so they went and they took classes on Coursera because they were bored and couldn't go anywhere, and, you know, why not learn something? And there was this thought that it was a one-time thing. And what ended up happening was Coursera not only held on to those gains once the economy opened up, but they continued to grow. And so our assertion is that the bears on online education, the people who are negative on companies like Coursera, are saying COVID was a one-time event. And our view, which is different, is it's proof of concept.
I see, Gary, there are a few questions about the ticker symbol and how to spell that company. I think you can you tell us that? Yeah, I think it's yeah, no, I mean, it's for you, the question, actually, but I can answer it too if you want to, but I think you can do it.
Right, I can't. Can I read the question online? Is that on the chat?
No, unfortunately, I have to tell you the questions.
Okay.
So yeah, so we do have questions, but I just have to post them to you. So people,
Sure.
Several people are asking about the ticker code and how you actually spell this company's name. So it's COUR, the ticker code.
That's Coursera. You've got the right one.
Yeah.
So it's COUR. Yeah, it trades in the United States, and Coursera is the right pronunciation.
Yeah, so you spell it COURSERA.
Exactly.
Coursera.
Yeah, they've got the right ticker. Yeah.
Okay. So Gary, could you tell us a bit about the financials of the company? Like, they're still growing. Like, are they growing 30% at this point, or how's it going?
Yeah. Let me just bring up my model here. So, hang on one second. I actually think I'm on the wrong tab. Hold on. Yeah, here we go. So the consumer business, which is about 60% of their business, last year, the last 3 quarters grew 69%, 81%, 69%. And last quarter, even on top of those huge gains, still grew another 16%. And so they, like I said, they held on to those 60, 70% gains and then grew on top of that. That part of the business, that represents 60% of Coursera's revenue. And those are individuals who take classes online. So let's imagine for a minute, you know, Christian, what are some of your interests? Do you like to read? Do you like literature? Do you like negotiating, investing?
Stocks, investing.
All right. So we could go online and, you know, like I went to the University of Michigan, there are classes from the, you know, the Michigan Business School or Columbia Finance or, you know, any of these other wonderful schools. And we could go take a class in business or accounting, finance. And many of those courses are free. If we just want the education, we can just sign up and watch the lectures and do the work. If we'd like to get a certificate saying we completed that course, they typically charge $50 to $100. And, you know, you could put together, it's not a lot of money. You could put together a large portfolio of coursework. Now imagine that you're part of a lockdown or something, and you go to interview for a job, and people say, well, what have you been doing? Well, look, I took these classes on Coursera, and this is what I've done in my free time. And, we encourage people to do that for career development. You can also do it for things that are interesting to you. In fact, I'm still in touch with one of my literature professors from the University of Michigan, and he's now teaching the classes I took in school there online. I could go take the same class again, which I think is fantastic. Previously it was only available to people who are on campus. Now people all over the world could do that. 30% of the business is the enterprise business. The last 3 quarters, that business has grown 63%, 69%, and 75%. That's the part of the business I was talking about before, where the number of companies they're working with has grown from about 300 to more than 700. So let's imagine this for a second, Christian. Let's say you really like computer programming. And, I don't know what it's like in Denmark, but in the United States, the kids who like programming, they may not be paying attention in school, but they are up all night coding and, writing programs. It's what they love. So for those kids, spending 4 years on a college campus may be a giant waste of time. But what they can do is take 6 months or so, and for a relatively small amount of money, complete programs that have been assigned by companies like Microsoft or Google or IBM. And then they go and say, hey, look, we've completed here's the coursework. I've completed these requirements, and those employers will accept completion of that coursework as proof of qualification rather than a 4-year university degree. That's a pretty good position to be in. Or if you're working for those companies and you either want to keep your job or you want to be promoted, they say, okay, here's the course list. Go certify that you've completed these courses, and you can get promoted. You'll be deemed qualified, and that is so much cheaper than having to go back to school. And again, I'm not sure how it works in Denmark, but in the United States, we would see people who complete school, work for a few years, and then what they would do is they'd go get their MBA program at night. And that's very expensive. And for about 3-4 years, they'd have no weekends. And it's exhausting. Well, what if somebody could just complete the required coursework in their free time? This is a better system, and that's growing very quickly. The last 10% of the business is online degrees. And that part, the last 4 quarters has grown 116%, 82%, 78%, and 59%. And so it's just huge growth. And the numbers there aren't big yet, but it's 100% margin. And basically what they're doing is Coursera is going to a university and saying, give us your programming, we'll put it online, we'll arrange for everything. And by the way, we've got 92 million registered learners, or maybe 95 at this point, it's something like that. And we'll advertise the class. And so universities spend a ton of money recruiting students to join their programs. They're not particularly good at it, but Coursera is great at it. So they partner with these institutions, and we see that as a huge source of future growth. I don't think that's going to remain 10% of the business over the next 5 years. I think that's going to grow substantially.
Max is actually asking a question which is kind of the same that I would like to ask, which is like, this is a growth company, so the growth is very high. On the other hand, as it is with those many of those companies, it's not profitable yet, and we're also in a situation where it seems like we're having rising inflations, and we may have rate hikes coming next year. How do you see this? Is this a danger for a stock like Coursera?
Yeah, sorry, Christian, do me a favor, please. Repeat the first part of the question. So the second part is concerned about interest rates, and we're definitely going to talk about that. What was the first concern again?
Well, the first thing is that Max is also asking the question about if Coursera is a profitable company, and it's actually a growth company, so they're not profitable yet, as you've told me.
Right.
So he's asking, when will they be profitable? That's one question. The second question is about inflation and rate hikes. Is that an issue for a company like Coursera when you look at the stock?
Right. Okay, Max, great question. Thanks for asking that. That's phenomenal. So let's talk about both those issues. First of all, you're right. Coursera is not profitable. And there's a huge discrepancy in terms of the business models between Coursera and their biggest competitor, which is 2U, and 2U just bought edX, and so, which I think was a phenomenal combination. And so 2U is saying, we're going to run the business to be profitable. We want to make money. Coursera is saying, we are going to take every penny we have of EBITDA, of cash flow, and reinvest it in growth. And they're saying, don't expect profits, don't expect operating income. We're going to spend it growing. And, you know, we can debate which is the right approach for this business, given the fact that this is a business that could grow 10 times the size over the next 10 years, and that it's technology based. We like Coursera's approach. Let's go back to the Bitcoin versus Ether question. Just so often, the market in these kinds of businesses belongs to whoever gets to scale first. Coursera is roughly twice as large in terms of number of learners as the edX 2U combination. And their ability to offer more programs to more people at lower cost all over the world, I think is how you win long term. We absolutely would give up short-term profits for grabbing that market. And it's why, and I think you've seen the title of this, it's why we compare investing in Coursera now to investing in Amazon 20 years ago. And 20 years ago, the stock market said, yeah, okay, Jeff Bezos, don't worry about profits. Grab the whole market. Just get big. And because Bezos did a phenomenal job communicating to his investors, don't expect profits now. We are going to grow. We're taking market share. His investors understood and gave him the leeway to do that. One thing we think Coursera, their CFO and investor relations people have done a great job. Go listen to the conference calls or read the transcripts. They'll tell you flat out, we are going to invest in growth. They're following the same plan that Bezos did. And so, you know, Max, while we love profits and free cash flow as much as everyone else, there's a reason we see this as an analog to investing in Amazon 20 years ago. Go grab market share. We think they're doing the right thing. And more importantly, we think they're communicating it, so investors know what to expect. Now let's go to the interest rate question. That is definitely a concern. So all of these high growth companies where the earnings are farther off in the future are more affected by a change in interest rates than companies who are earning money now, right? This is, of course, you know, they're going to react to that. And it's something that we did put in our report. So just everyone who's listening now, last summer, we put out a 20-page report on online education, focusing on Coursera and 2U. Obviously, we think Coursera is the better pick. At the Deep Knowledge Investing website, it's behind the paywall. As a thank you, a manga talk for you guys for inviting me to come speak to your audience. We have made that report available to your whole audience, everybody who's listening today. You know, Christian or Eric will be able to send that out to all of you.
We'll do that.
And so, you know, we're happy. It's our proprietary work, and we're happy to make that available to you guys at no charge. And hopefully, you see the value in the work. But it is something we talk about, that you'll take a look. There is an extensive section where we talk about the risks, and one of them is interest rate risk. Certainly, that has caused the stock to move over the last week in a negative direction. It's a risk that we're taking. The other side of it, though, is, you know, this is the kind of stock, again, where you could make 5 to 10 times your money over the next 5 to 10 years, the big lever we think is the growth of the industry. Interest rates matter, but the fundamentals here I think are just too good to ignore.
Okay, interesting. So yeah, Gary, actually, I mean, I have a lot of questions, but I think you did have a second stock pick as well that we because we don't have so much time left, unfortunately. So I think maybe we should talk about that too.
Sure. Another stock that we like in the education sector is Houghton Mifflin. HMHC is the ticker. And very quickly, this is a play on digitization. So let's think about when, Christian, when you and I were back in school, what happened? The textbook publisher would print a 10-pound textbook. So you have this huge textbook, and they would print it and bind it, and they'd ship it. And then your school would hand them out, and it would be in circulation for 5, 6, 7 years, right? You'd open the book, you'd see who else had put their name on it from the year before, and you'd carry this huge book around with you. And that business has gross margins in the neighborhood in the United States of about 20%, 18 to 22%. Now what happens is most students have electronic devices, and so they email the textbook to the students, and every student gets the updated version every year electronically delivered. And the margins on that business are 60 to 70%. That's the gross margin. So if you're going from a business that does 20% margins to a business that does 60, 70% margins, you're talking about a 40 to 50% increase in gross margin. And right now, digital is about 40% of Houghton Mifflin's business. We think it'll go to 80% over the next 5 years. So even if we don't have huge growth in education spending, which I see as unlikely, you just have huge margin increase. And for every incremental dollar of revenue, 65 cents of that ends up on the free cash flow line. And so these guys, they're different than Coursera. They're going to print huge amounts of free cash flow. The other thing that we'd point out is, I'm not sure what it's been like in Denmark, but in the United States, the kids who were in elementary school, middle school, high school, the online learning thing didn't go great for them. It's working at the university level. It's not so great for the 6 and 7-year-olds. And so we had a year last year where they're referring to it as learning loss, where students, they had a year of school or a year of physical development, but they didn't get a year of academic development. And so a lot of these students are going to require intervention and supplemental materials. And guess what Houghton Mifflin sells? They sell a lot of supplemental materials. And if you take a look, the margins on that business are also extraordinarily high. And so we just see this as a high growth area where the margins are improving, the free cash flow is going to improve. The stock is up a lot. We had our subscribers in the stock earlier this year at $5. Right now it's around 15. I still think it's cheap here. For what it's worth, for people who feel like you missed it, I haven't sold. I still own it personally, and Deep Knowledge Investing subscribers know that. So this could go up substantially even from here.
So you actually recommended this stock at $5, and now it's at more than 15.
Yes, and we haven't sold. That's right.
Okay, so once again, I see Martin is asking about this. The ticker code was HMHC. Just to be sure what we are talking about, you can check it out yourself. And unfortunately, almost all of our time has passed, Gary. But I want to ask you the last question, which is how can people actually get in touch with you, and what can you offer our users, and yeah, how can you help people?
Sure. Thanks for asking that. So there are two ways. We definitely work with people like your audience. We do very targeted, high probability stock picking. We've done it well. So there are two ways that you can be in touch, and I welcome you to do so. One is you can go to the website, www.deepknowledgeinvesting.com, and you can sign up. We have subscriptions for $100 a month or $1,000 a year. You know, one or two good stock picks will make that very cheap. The other way, if you have questions and want to be in touch, feel free to email IR so for investor relations, IR@deepknowledgeinvesting.com. And, you know, we'll be happy to help you out. And if you feel like you'd like to be part of it, we'd love to have you subscribers. If not, it's been wonderful talking with you today, and feel free to follow us.
Gary, it has been extremely inspiring to hear your thoughts about these different stocks and the market in general. We're really happy to have you as a part of our webinar series here. That has been a very big enjoyment to listen to you talk about these stocks. And I think also your way of working with this very deep research is inspiring to all of us. So thank you very much for being with us tonight. And I'll send out the paper that you talked about. And I'm really happy to have had you here on this webinar tonight.
Christian, thank you so much. Thanks for having me. For everyone who was watching, thank you for your time. Really appreciate the opportunity to talk to you.